Hey everyone, and welcome. Today, we're focusing our lens on a massive financial shift that's literally impacting every single one of us, no matter where you live. We're talking about the US dollar, the greenback, and its absolutely relentless climb upward. In this explainer, we're going to map out exactly how this is happening, why it's happening, and most importantly, what it means for you. Let's get right into it.
So the US dollar has recently climbed to its absolute strongest level in over a year. And the sheer scale of this ascent, it's staggering. If we look at the dollar index, which is basically this vital metric measuring the US currency against a basket of other major world peers, it's experiencing a monumental surge. It's redefining the global economic landscape right before our eyes. Right now, international investors, economists, you name it, they are all watching this phenomenon incredibly closely. Because when a currency as dominant as the greenback shifts this dramatically, it creates a massive wave. It has the power to impact absolutely everything, from the gas prices you're paying at your local station all the way to the performance of major global stock markets.
Okay, let's dive into this because that is the ultimate mystery, right? When the dollar flexes its muscle like this, we've got to ask, who actually wins and who loses? The ripple effects of a strong dollar spread far and wide. They touch international trade, domestic businesses, and of course, everyday consumers in very, very different ways. So to truly grasp the scope of this whole shebang, we need to break down the mechanics behind the move.
Part 1. The dollar's massive rise. Which brings us to Part 2. Why is it surging?
So what's actually driving this massive rise? Well, we can distill the incredibly complex global financial system into two clear, distinct drivers that are working together to push the dollar higher. The first major driver, the U.S. Federal Reserve. With expectations that the Fed might raise interest rates again just to combat inflation, those higher yields basically act as a giant magnet for global capital. Investors want those returns. And the second driver? Global uncertainty. This is completely shifting investor psychology right now. Now, what's really interesting about this slide is how global uncertainty pushes investors towards safety. In times of unpredictable market volatility, the dollar acts as the ultimate safe haven currency. Think about the recent tech stock sell-offs or those escalating geopolitical tensions we've been seeing. What happens? Capital flees risk. It moves in droves straight into the US dollar, which drives demand and value even higher. Investors fundamentally trust it to hold its value when the rest of the world just feels a bit economically fragile.
All right, Part 3. Currencies getting crushed.
We've established why the dollar is rising so rapidly. But here's the thing. In the global currency market, when one giant rises, others inevitably have to fall. It's like a perfect seesaw effect. On one side, you have the strengthening US dollar. On the other, major peers like the euro and the Japanese yen. The dollar's massive gain translates immediately to a loss of purchasing power for these other vital currencies. It's direct cause and effect. And the impact here is heavy. To put it in perspective, the euro has fallen to a one-year low against the dollar. When a currency representing massive global economies drops to a level like that, it completely alters the dynamics of international trade. It makes American goods so much more expensive for European buyers, which fundamentally shifts the balance of global commerce. Let's look at Part 4. Commodities and crypto full. The strength of the greenback doesn't just crush other national currencies. The ripple effect extends way further out into alternative assets, both physical and digital. Honestly, if your portfolio holds anything other than pure US cash right now, this strength is probably impacting you. For physical assets, like gold, we're seeing a direct drop in prices. Why? Well, because gold is priced in dollars, a stronger greenback makes it significantly more expensive for international buyers, which really cools off demand. Concurrently, digital assets, like the cryptocurrency markets, are facing similar downward pressure, as dollar strength just kind of overpowers alternative investments. Moving on to Part 5, the corporate profit squeeze. Now, you might logically think that a strong US dollar is universally fantastic for US businesses, but objectively exploring the data reveals a pretty surprising downside. A recent Barron's note captures a massive hidden cost, stating, foreign earnings become less valuable when converted back into dollars. So the crucial point is, this is a fascinating pattern interrupt to the typical narrative. For multinational American companies that are paid in weaker euros or yen, converting those overseas profits back into a surging dollar eats directly into their bottom line. It's a real squeeze. And our technology giants are especially vulnerable to this trend, mainly because they earn a huge chunk of their revenue overseas. If you hold these tech giants in your own portfolio, you're directly feeling the squeeze of these global currency conversions. A strong dollar actively shrinks their reported overseas profits, shifting the financial reality of companies that usually just dominate the market. It's wild to think about.
Okay, part 6. What happens next?
We've seen the rise, we've explored the causes, and we've mapped out the global impacts. But markets are entirely forward-looking, and everyone wants to know what's going to dictate the greenback's path for the rest of the year. Looking ahead, investors are laser-focused on 2 key variables. Step 1, awaiting the upcoming inflation data. And Step 2, watching how the Federal Reserve reacts to it. The outcomes of these 2 future events are the key variables that will ultimately determine whether the dollar continues its historic climb or if it finally begins to weaken and gives the global market some room to breathe.
Which leaves us with this final pivotal question. Will upcoming inflation data continue to crown the dollar as king, or is a reversal on the horizon? It's a situation that requires our constant attention. I really hope this clear breakdown has empowered you to watch the markets with a much sharper, more informed perspective. Thank you so much for joining me and exploring this fascinating topic together in today's Explainer. Keep learning, keep analyzing, and I'll see you next time.